We are going to be covering everything tax related on IB, how to master taxes on IB. I think this is pretty timely given that tax season is coming up in April, and we really want you to understand how tax works, how tax reporting on IB works, and all the nitty-gritty places that you might find tax on IB. So to start, there are a couple different places where tax lives in IB. So we have products and services where it actually is attached, the taxable nature is attached to the product or service itself. Of course, your rates, such as your time billing rates, anything that you are billing out using the time billing function, you can mark those as taxable or not. Your vendors on the vendor level, and we're going to go through everything here in IB itself, but on the vendor level, you are able to determine tax or not. And of course, the overarching actual sales tax rate itself lives on the account, the project, and the document level. So that's where we're going to start right now, and then we're going to dive into the nitty-gritty tax reporting, vendor tax, once we have this basic understanding of where taxes live. So what I'm going to do is go ahead and move into IB. And there are a couple of things that I want you to keep in mind with taxes. Because they are attached to the product or service, as we see over here, and the rate itself, you're going to want to make sure that when you add a product or service to your library, you include as much information as possible. You want to set yourself up for success. And the best way to do that is by inputting as much information as you can from the start. So there are a couple of places where you can add the taxable checkbox, or you could check it off. The first is in the IB Clipper. So if you know and love the IB Clipper, you can always clip items directly into your product library. And I just want to show you quickly here how you can associate whether an item is taxable or not on the product level. So I'm going to activate the clipper and zoom in right over here. And you'll see that by default, products are marked as taxable. And if you need to, you can always uncheck it. But this is one thing that you will want to make sure from the start. Is it taxable? Is it not? You determine, put it into your library, don't think about it again. Okay, so that's the product library, or that's the clipper. And now moving to the product library, the same way, when you add a product manually to your product library, you also have the taxable function right there. So these are things that you just want to make sure are set up properly. Products by default are marked as taxable. Services are not. In some states taxable, in some they are. So you'll see that you have to determine whether it is or not from the start. Okay, so that's the first thing. The second thing about where taxes live are on rates. And this means that if you are billing out on a time billing, if you're billing out hourly and you are utilizing IB's time billing feature, you are going to want to set up your rates and determine whether they are taxable or not. Again, this varies state by state. It's according to whatever jurisdiction you're in. And what I'm going to do is toggle over to the Team Rates tab and just show you where that taxable checkbox is. And all you need to do here is click Set up a new rate or edit an existing rate that you have. And you'll see taxable is a checkbox right over here once again. So you want to be sure to set up your rates, your products, your services from the start as taxable or not. Now, what is that tax rate? Well, that's up to you to determine. There are 3 different places where sales tax lives in terms of the rate itself. And as I mentioned in our previous slide, there is the account level, the project level, and the document level. So the account level is accessible from My Account, and all you'll want to do is go over to the sales tax rate. Now, you'll see a little pop-up over here that says for every project, you will need to have an associated sales tax. Here is where you would use any frequently used sales taxes that you want to easily select from a drop-down menu. So in Los Angeles, we have a couple different, in New York, we have a couple different tax rates. Depending on whatever is relevant to your firm, you can simply add the sales tax rate right over here and save it. And this will make the sales tax rate easily accessible on your projects and documents going forward. So all about setting up your account for everything tax related. Okay. So while we're on the topic of sales taxes, let's go ahead and take a look at the project level, see where that lives, and then we are going to dive into taxes themselves. So last thing I'm going to do, go into a project that I have over here, Bobby's Malibu Beach House, edit project. And one of the things that you must include when you are creating a project is the sales tax rate. Right over here, I can click on it and see all of my sales tax rates as a company and add one on the spot if I need to. Okay. So with that, the last thing I will say about sales tax, here on the slide we had mentioned vendors as well. This I'm going to go into a little bit later, but just wanted to show you all of the different places where that little taxable checkbox lives and how you can navigate that. So with that, let's dive into the things that people actually want to hear about, which is tax reporting on Ivy, because this is something that really a lot of people ask about. It's really important for you to understand how Ivy's tax reporting structure works, just so that you can do what you need to do to manage your business effectively and understand where that tax number is coming from in the reports that Ivy provides for you. Okay, so with that, a couple of things about tax reporting that we're going to dive into right now. Ivy's tax reporting is accrual-based. We'll talk about what that means in a second. We're also going to talk about liability versus revenue. These are accounting terms. I know it's Friday. I know it might be hard to digest, but trust me, it's important to know the difference. And then based on what we know about accrual-based, based on what we know about liability and revenue, a couple of best practices that we recommend in Ivy for you to manage your business effectively and work with the tax reporting structure that we have in place. So let's go. So we have, in general, in accounting, there are two different types of reporting structures. There's accrual-based and cash-based. And Ivy's reporting structure is accrual-based. And this is really important to know. If you integrate with QuickBooks Online, in QuickBooks Online, you determine whether your reports are accrual or cash. However, by default in Ivy, everything is accrual-based. And this is to simplify tax reporting. So what does accrual mean? Accrual is tax owed based on the total value of invoices created in a specific tax period, regardless of whether payment was received or not. So let's say this month in February, I've created 10 invoices and sent them out for payment. I have yet to collect payment on any of them. If I run a tax report, it will say the total taxable value is the value of all 10 of those invoices I created in February. On a cash reporting structure, the total value of paid invoices is what determines the tax. So in the example that I just gave, I sent out 10 invoices. They have yet to be paid. I would only be collecting tax on my paid invoices, or paying tax, on my paid invoices. In this case, in the month of February, that would still be 0. It makes it much easier for reporting structures and cleaner if you are doing it on an accrual basis. And so we will talk a little bit about a couple of the different best practices that we recommend at Ivy because of this accrual-based structure. So with that, I'm going to move on to the next slide. Accrual versus cash. So because we are accrual-based, a couple of things that we want to make sure that you understand. So What is accrual? Again, it's on the value, you're paying taxes on the value of invoices created in this specific period. So the overarching theme here with tax reporting on IB is you eventually, of course, will have to create an invoice, but when you create an invoice is up to you. You want to make sure that when you create an invoice, it's finalized pricing. There probably won't be many changes to it. And you also want to make sure that you're ready to do so. So eventually everything is going to have to go to an invoice, but when that happens is up to you. And we have a couple of things that you can do on IB to prepare yourself essentially for this accrual structure. So the first thing that we recommend doing is collecting a 100% deposit upfront on your proposals. Once you're doing that, you are collecting payment. In accounting terms, I guess, proposals can be thought of as accounting fluff, as my colleague Gilly likes to say. And collecting money up front will allow you to get those products going, will allow you to get the project moving. You're collecting money and it has yet to be on an invoice, but you have the ability to use it to get the pricing, to get the project going. So another way to do that, if you don't want to necessarily collect a deposit on proposals, is to utilize retainers. You can think about deposit payments on proposals and payments on retainers in the same way. You are collecting your client's money, a sum of money up front, and it has yet to be applied to an invoice. So retainers are an amazing way. Collect that money, hold it in liability, and then once you're ready, apply it to an invoice. What you'll see here with the proposal deposit payments and with the retainers is we're basically delaying the creation of an invoice. Why? Our accrual-based accounting structure. It's important for you to know that when you create the invoice, you will have to pay taxes on it, or you will owe taxes on it. So the last thing that we would recommend utilizing is IB's progressive invoicing function. If this is something that pertains to your firm, if you want to invoice specific items from a proposal as you are ready to do so, you can use our progressive invoicing function, create those invoices on the go. Okay. So just to recap, we have accrual-based accounting structure. Taxes owed on the total value of invoices created in the specific tax period, regardless of whether payment was received. And we have the 3 best practices accordingly. Collect 100% deposit on proposals, convert to an invoice when you're ready, use retainers, and utilize progressive invoicing. So what I am going to do is actually walk through all 3 of these kinds of things that you can do and show you how it works based on IB's accrual reporting. And then we'll get into a little bit more about IB's tax reporting, the 3 different kinds that you could pull, and vendor tax specifically. So let me just, oh my gosh, I have a new, okay, there we go. I have a new computer and I'm still learning how to use it. So let me go back into IB here. So the first thing that you can do, I'm gonna just pull up a proposal that I already have right over here. Of course, I assume if you're joining our tax accounting lecture today, you must know how to create a proposal. So I'm not gonna go through the details, but what I will do is add a couple of items right over here. And when I add these line items to my proposal, you'll see this tax button. I'm going to get into that a little bit later. But for now, what I will show you is the deposit request right down here. The proposal is an amazing time. These are estimated charges. You want to collect the money up front, and you can request whether to take a percentage deposit or a specific dollar amount. I really like the percentage deposit simply because with IB, you can give your client line item approval. So there's a chance that the total cost of the proposal will actually change. It will reduce. And if you put 100% deposit, The percentage will stay the same, but the amount will change. So I like doing 100% deposit. You'll see what that looks like right over here on the proposal. Okay, so when I save this, you will see right down here, let's say we do give our client line item approval, what I was just talking about. When you decline an item, you could see that the deposit requested is still 100% of the balance. So that's why I like doing 100%. But this is an amazing way. Collect that deposit up front, and when you're ready, convert this to an invoice. Okay. So Stacey's actually asking, can you show us the progressive invoicing function? Absolutely. So to turn on progressive invoicing, the first thing you're going to do is navigate to the top right-hand corner of your account and click on My Account. The Settings tab, which I'm going to dive into right now, is only accessible by the account administrator. So if you are not the account admin, you will not see this in your account. And that's because these are system-wide, account-wide settings that have to be set in place by the admin. And one of those settings is a question of how do you run your business? How do you want to run your business on Ivy? And by default, you'll see if you don't have it turned on, this is going to be the default setting that is selected. Automatically convert all approved proposed items to an invoice when clicking on Start Invoice within a proposal. However, if you do want to utilize progressive invoicing, you will need to toggle over to Allow progressive invoicings when invoicing a proposal will allow you to select specific items. Simply click that one and click Save, and you have turned on progressive invoicing. So let's go back to that proposal that we were just in at Bobby's Malibu Beach House. When I have these items, let's say I have collected my deposit payment for my client. I'm just going to record a check payment here for the full amount. When I go to invoice this, whether it's tomorrow, whether it's a month from now when my vendor has given me the pricing, whenever you are going to invoice it, all you'll need to do is click on the top right-hand corner and click on Start Invoice. And now you'll see this pop-up comes up that says Create Invoice, and you can select the items that you want to invoice. This is what progressive invoicing is all about. Understanding that your invoice that you create has a tax implication in terms of owing taxes based on our accrual-based system. And maybe you only want to invoice it when your vendor has confirmed that the item has shipped, it's in stock, it's ready to go, right? So let's say Restoration Hardware told us, we have it, we're good to go, this is the final pricing, amazing. I'm going to invoice just this table and continue over. Now I have my invoice for this one item, and I can save it. Make any changes you need to. If you want to update the description, if there was a shipping charge that you now know, that's the place to do it. But let me show you what it looks like on the proposal side. First of all, I'm looking at the connected document here. You'll see that this proposal that it's connected to, its status is partially invoiced. When I click on the proposal, I could see 1 out of 2 items have been invoiced. I could see the connected invoice, and I can also see the connected document right over here. What's so cool about this, by the way, you see this invoice and it says paid. That payment that we collected on this proposal transferred over to the invoice. So there's no need to worry about it. It is an applied payment. It's on the invoice. You're good to go. Okay. So those are the 2 main best practices that we recommend are collecting a payment on proposals, retainers work the same way, and then converting to an invoice when you're ready. All of this is trying to manage your cash flow, collecting money up front, get the projects going, and create an invoice when you're ready. Okay? So, of course, guys, if you have any questions, just please submit them so I can answer them as we go along, because I know I might be moving a little fast, but I want to make sure that you know everything that we're going through. So with that, that was kind of a precursor to the basics. We saw where taxes live in IB on the product level, service level, everything. And we can now understand why are we recommending these best practices for accrual-based reporting, is because accrual-based reporting determines the tax on invoices created. Now, what kind of tax reporting does IB give you? Well, we have 3 different types of tax reports that you can pull on IB. And we're going to go through those right now in detail. So we have right over here the tax reporting, taxes liability report, which is going to be the broadest kind of tax reporting that we offer on IB. It is basically a bird's eye view, overview of how much you owe based on what is marked as taxable. We also have the transactions and invoices report, which will show you on a document level the tax structure. And then we also have the project tracker report, which is the most granular level of tax reporting on IB. It is item-based. So 3 different levels. A lot of our designers or bookkeepers who use IB for the design firms will basically pull all 3 of these and cross-reference it, because ideally what you should see happen, the project tracker items line up, which connects to the document, which connects to the company level. So everything, it's just a matter of how you want to see it. Okay, oops. So before I move on actually and dive into the reports themselves, we do have a couple questions that came in just about the last topic that we covered, and I want to make sure that that we cover this before we move on. So with that, Rachel is asking to see the payment on the invoice that was created from our partially invoiced proposal. So what you'll see over here is the paid balance, or the payment, no balance. So you could see over here the total payment that was received, and what was applied to this invoice specifically is the balance of this invoice. And just in conjunction with that question, Wendy is asking, can you print out paid proposals as an itemized list? Yeah, of course. You can always download a PDF of any document in IB, and you'll see it right over here. In this case, this is the invoice. The same would apply to the proposal, but you'll see the itemized list, and you can even see if there was a payment applied. So Wendy, if you want to show that paid proposal, you can even have your client physically sign off on it on the PDF version itself. And Elizabeth is kind of also piggybacking on that question. She's asking, when you create the invoice but don't send it, and you've received the payment from the proposal, the recorded payment will show up automatically? Yes, as we see here, we didn't send this invoice. The payment transferred over from the proposal. It is now applied to the invoice. We never sent it, but it's here. It exists on the document level. Okay, perfect. So feel free to keep asking these questions. I will try to answer them as I go along. We were going to, while this is like about reporting specifically and tax reporting on IB, how to master that, I'm going to show you kind of the tax reports that you could pull. We're going to look at them twice, because first we'll look at them just to see what they look like, and then the second time we'll look at them is going to be in a different context. So reporting, how can you pull reports on IB? Well, simply toggle over down here to the reports function. And remember, I talked about 3 different types of tax reports on IB. So one, taxes liability, one is going to be the transactions report, and one is going to be the project tracker report. Okay. So what I'm going to do is start with a taxes liability report and show you what this looks like. So this is the company level tax report that you could pull. And this will allow you to customize the dates, whether you want to see if you are reporting on a quarterly basis, a monthly basis, if you're filing on an annual basis, whatever it is, you choose the dates here if you want to. And then you can choose whether to see it on a project level individually or across all of your projects. And so let's see what this looks like. I'm gonna just generate this across all my projects. It will pop up down here for me. I'm gonna download this and open it up. And I have the numbers right over here. Not now, perfect. Okay, so, oh my gosh, I told you guys I have a new computer and all the pop-ups are still coming up. So what you can see here, this is the taxes liability report. This is the company view. This is general numbers. So this will show us the total taxable amount for services, the total taxable amount for products, transaction fees, and then the taxes owed according to these numbers, right? So we have 2 LA County tax rates here based on the fact that we have $1,625 in taxable services. Okay, I'll give with the total tax number. We have a total of $7,227 of taxable items in this tax rate. We owe accordingly 10%. This is just the company level, the overview. The best way to work with this report, I would say, is to pull it and cross-reference it. Use this one as, okay, we have $722. Where does that money come from? Well, let's look on the document level on the transactions report. Ivy gives you the ability to set your tax rate on a project account document. So let me actually just go back to this document over here, and you'll see right here, taxes, that's according to the tax rate that we selected for this document. So where can we see that? Well, the transactions report, specifically invoices. Pop quiz, can anybody tell me why we're looking at a transactions report for invoices? Because Ivy's accounting structure is accrual-based, meaning any invoices that are created. If you happen to be running your books on cash and you want to see how you could do that on Ivy, all you would do is change this to paid invoices, of course, because you're only paying taxes on what has been paid. So what I would do here, pull the transactions report. Again, I'm going to customize it for the same dates that we did before, basically year to date in 2019, across all my projects or on an individual project level. And in this case, I'm going to do all statuses for all invoices because this is accrual-based accounting structure. So I'm running the report, transactions report right down here. I'll download it and open it up in Numbers. Perfect. So what you'll see is the transactions report is more detailed, of course, than the taxes liability report. I just want to show you the taxes liability report, or actually no. You'll see that the transactions report is more detailed, and this is going to be on a document level and show us a couple of relevant tax information. First, you'll see the total amount of the invoice, but of that, you'll see the taxable amount shipping, and then the tax itself. So again, this is the document level. We are getting a little bit more granular in how Ivy reports. So we have the company level, and this is the document. So it gives you the ability to really understand where those tax numbers on the taxes liability report are coming from. This is where they're coming from. They're coming from the invoices in our company, no matter whether they've been paid or not. Okay? So this is a really great report to pull and cross-reference with the taxes liability report. And then the most granular tax reporting structure that you can pull is the project tracker report. And I want to show you these 3 reports because we're going to look at them in a different light in a second. So I just want to make sure that you at least have a general understanding of why we're talking about them. So once again, I'm going to pull the project tracker report year to date you could do it for all your projects. Again, individual project basis. I'm simply going to do all my projects. And this is where you can really customize the reports according to what you need. Just for example purposes, all we really care about is the pricing. So I'm just going to remove a couple of other information from here, just so that it's not too busy, and then download it right over here. Okay. So you'll see that, oh my gosh, sorry guys. You'll see right over here, this is now an item by item tax reporting. So company, we have taxes liability, transactions report, we saw at the document level. This is item by item. All of our products, all of our services, and anything specifically, it will show me if it's on an invoice or not. But you'll see right over here the detailed numbers. You could see whether the item is marked as taxable to start. You can also see, we're going to get to this in a second, the breakdown of the tax. And this is going to be, and the breakdown of the tax on shipping. And this is going to be the most granular level of tax reporting on Ivy. It gives you that detailed breakdown per item. What is taxable and what is that tax? How much does it cost? So these are really the 3 different types of reports that you could pull on Ivy for tax reporting, and we're going to revisit them in a second when it comes to vendor tax. But before we do that, I want to just ask any questions that have come in, see if any questions have come in that we can go through. And just a reminder, this is recorded, so if you have to get going or if you came in late, no worries. You can always revisit this at a later time. So Casey, you're asking if I would recommend switching to accrual-based accounting. I know that you're already in talks with your accountant because you said my accountant thinks blah, blah, blah. I can't advise on that. I can only speak to how Ivy's structure is accrual-based. So we did that on purpose. We think that it's simpler, but that is going to be a decision that you have to make with your accountant. I can't make any recommendations, unfortunately, but I could tell you how to work with Ivy's accrual-based system. Nicole is asking, how do these same reports work or look in QuickBooks? Well, these reports don't transfer over to QuickBooks, but all the information on these reports transfers over to QuickBooks. QuickBooks, I think, allows you to create like 90 different custom reports, if I'm not mistaken. And so the information that is on these reports would still be in QuickBooks Online, but you could basically pull a different report directly from QuickBooks if you want to. And Gail and Annabelle asked, how did I pull these reports so quickly? Well, there are 3, let's go through the steps over here. So the first one is going just to the reports tab on the bottom corner over here. And we have the drop down of all the different reports that you could pull on Ivy. We went through the taxes liability report. We went through the transactions report and the project tracker report. And for all of those reports, you can specify the date range and whether it's across all your projects or on an individual project level. Once you generate it, they will live down here for you to download. So I hope that that helps. Elizabeth, what would you need such a nitty-gritty report as the project tracker for? Great question. That is something that varies firm by firm. The project tracker report is amazing. Like, I know a lot of firms will use that just for that tax level, that granular tax level of like, what is taxable? Double checking their work. Did we mark everything that we needed to on the document level? The project tracker is my favorite part of Ivy. I could talk about it for hours, but it really will just depend on your firm's needs. If that's too granular for you, more power to you. I work off of the invoices report, the document level, but I do know that we have a lot of firms who use the project tracker report for tax reporting functions. Tamara, sorry, that was weird. Tamara is asking, can you limit items shown only by only those invoiced? Great question. Yes. So the way to do this would actually be, it wouldn't be across the company. This would be on a project level. So let me show you how to do that. What I'm going to do is I'm going to go into a project tracker. Actually, I'll go into one that's a little bit more populated here. And the project tracker, like I said, my favorite feature, could talk about it forever, allows you to really to filter through this and kind of change what you see. So first of all, you have default settings here where if I don't want to see, let's say, the item details, I just want to see the numbers, I can uncheck it and see just the pricing numbers right over here. And then to limit it to see what's on an invoice, well, I would do a double filter there. I would just click search columns, and you'll see that each column now has a little search bar added to it, which allows you to then filter. So in this case, you're asking about seeing items that are only on an invoice. Here you go. I'm going to click IN. Every single other item that does not fill this column with IN is no longer shown. And you can select these items right over here and click download to Excel. Okay, so you could basically filter it down. So even more specifically, I could see invoices by vendor, let's say, if you want to see that, or like by a specific vendor. But what I would do, I would just simply click all those items, click download as Excel. You'll see the details that you can select, and then you have a project tracker report based on items that are only on invoices in your project. So that's one way to do it. Rachel is asking, do these reports include items from Open Invoices? What if there are draft invoices that haven't been sent to clients? Yeah, they do. IB is accrual-based reporting, meaning when you create an invoice, even if it hasn't been sent, even if it hasn't been paid, that is taxable income, that is taxable revenue. So that's why earlier on we talked about some best practices that we recommend. Work with proposals. Proposals are accounting fluff. They don't count as taxable revenue yet. So if you sent it to your client as a draft, or if they are just drafts, absolutely work with a proposal. Start with a proposal, convert it to an invoice when you're ready to go, when you are ready to, when it's ready. So I would always start with a proposal. Cool. Yes. Okay, Heather, you asked a question that will bring us to our next topic. So thank you guys. Please keep bringing these questions in. It's so important that you guys understand how you can utilize tax reporting on IB. So with that, I'm going to dive into the last part of this webinar. I can't believe 40 minutes have already passed. This has been so fun. So recently, at the beginning of this year, IB released a feature that has been a long time in the works called vendor tax. And vendor tax is amazing. I was so excited when this was released because, the reality of today's world is that you are probably going to be buying products from retail vendors. Whether that's Wayfair, whether that's Restoration Hardware, Home Goods, Accessories, West Elm, whatever it is. The government across the board, in interior design specifically, has been collecting double tax for a really long time. And that is a problem across the entire industry. Because what happens? You buy from a retail vendor, you pay tax. You resell that item to your client, they pay the tax on it. That's a problem. We don't want to we just want you to get reimbursed. We don't want the government to get paid more than they need to. We also want you to get that money that you already paid out. So let's go through how vendor tax works on a really granular level, and then where, as Heather asked, where on the reports you could see the tax that was paid to the vendor already. So why use vendor tax? Well, keep better track of the taxes due and only pay what you owe. IB's vendor tax settings, you can easily indicate with which vendors, products, or services required tax to be paid up front, ensuring that you don't overpay or double pay on taxes when you file. So let's give a scenario here that might relate to a lot of what you do day to day. Tax paid to vendor upon purchase. Let's say you purchased a sofa from a retail vendor for $1,000 in a 10% tax district. So you pay tax already $100 to that retailer. However, you mark up the cost of that sofa to $1,250. One way or another, your client has to reimburse you for the taxes you already paid to the vendor, in addition to the tax on the markup. That is the kicker. That is where a lot of this difficulty lies, because markup is a taxable item because it's attached to a product, and you are including it in the total selling cost. So there is some additional money here that tax has not yet been paid on, and we are going to help you identify what has been paid, what else needs to be paid, what is going back to you as a reimbursement. So here's how Ivy can help. In this case where you prepay tax to the vendor, well, what you'll do, and we'll go through this in Ivy, select tax on markup only on that product level. What you'll see happen, and again, we'll go through this in Ivy step by step, the client will still pay tax on the total selling price, but we will help you understand the liability. We'll say, client's paying you back. You already paid this money to the vendor. This is what you're getting back. And you'll be able to see that. Elizabeth, you were asking on who would use the project tracker report. That is an instance where you would use the project tracker report, because it will clearly identify tax paid to vendor and additional client tax that was paid on an item. Okay, so vendor tax, that's how it works, that's what it looks like. So remember earlier we talked about all the different places that Ivy, where taxes live in Ivy. Well, let's start with the vendor level. So I'm going to go back into Ivy here and toggle over to my vendors tab. So you can basically set default settings on the vendor level as to whether your vendor charges tax or not. If you're purchasing from trade vendors, you have your resale license, more than likely your vendor is not charging you tax because they know you will get it from your client. Not the case when you're buying from retail. So I'm going to just pull up Restoration Hardware here, click on edit mode, and you'll see that a new function was added here on the vendor level. Charges tax, question mark? Well, yes, Restoration Hardware is a retail vendor. They do charge me tax. I simply need to set this as a default yes. You could do this for all of the retail vendors that you actually source from. Wayfair, Target, Home Goods, West Elm, Restoration, all of the different places. And you'll even see this question mark help you identify that any product now added to that is associated with this vendor, we will know vendor collects tax. Okay, so that's the vendor level of taxes. But let's see it on the line item itself. Let's see this in action, okay? So I'm going to go into one of my projects and start with a proposal. Let me just open up right here. And I'm going to create a new proposal. And in this case, I know that Restoration was one of the vendors that I marked as taxable. So I'm going to add an item that I have from Restoration and Hardware that I added. And this is where the vendor tax magic happens, okay? The taxable question mark is now a gear, which will allow you to set the taxable nature of this product or service. So in this case, remember Restoration Hardware, retail vendor, we know that the vendor charges tax. We know that because we toggled it on and we said, yes, Restoration Hardware charges tax. So by default now, this restoration product is toggled over to markup only. What does this indicate? This indicates that you have or will pay tax directly to the vendor, meaning we are only going to be collecting that extra tax on the markup from your client and reimbursing you for the rest. Your client will be reimbursing you. So what does that look like here? Tax says markup only. As I mentioned in the slide, your client is still going to be paying you for the total tax. They aren't just paying you for the 40% markup. They are going to be paying you for the total amount because we know that you already paid it out to your vendor. They're just reimbursing you and paying you that little something extra. Okay? So just to kind of bring this back over here to clearly give it in easy numbers, you purchased the sofa, you paid $100, you mark up the sofa to $1,250, you would simply select markup only on the product, and the client is still paying the total tax on the total selling price, but we are identifying what has been paid to the vendor already and what is additional that the client is paying. Okay? So how would you do this? Well, how would you see this is actually the better question. Two different reports will lay this out for you on tax paid to vendor versus tax paid by client. That will be the taxes liability report and the project tracker report. So let me show you what it looks like on Ivy, on the project tracker report. Heather, this is going into the question that you asked about how you could see this. Well, when you select markup only on a product, this is a screenshot from the project tracker for the total selling price. You'll see that little T button indicates that there is some level of tax on this item. And when you hover over it, it shows you the breakdown, client tax versus vendor tax. In the example above, you see that the tax breakdown was markup only, so we distinguish it. Tax paid to vendor, $23.50. Additional tax paid by client on the markup, $7. Total tax was $30.50. Part of that, vendor tax, reimbursed to you. The additional client tax, first time it's seeing the government size. So Casey, just to clarify, you said so markup only on the product, not the total price paid, including tax. If you are attempting to get reimbursed, essentially, if you already paid out tax or if your vendor charges tax, you will want to select markup only on that product, simply for us to be able to distinguish what has already been paid to the vendor and what has yet to be paid by the client. In this case, the tax on the markup versus the tax on the unit cost of the product. Okay. So that's if vendor collects tax. This is what it would look like: vendor tax, client tax, total tax. But that's accessible directly from the project tracker. Now, how else can you see this? Well, remember when we pulled our super granular project tracker report? And I was like, look, there's a lot of details here for you to make a custom report. You'll see a couple of really relevant pieces of that report when you go to export it to Excel. You'll see client tax and vendor tax, and then client tax for shipping and vendor tax for shipping. This is where Ivy will distinguish for you, once it's in Excel, what that actual total cost was. What did the client pay? What was the vendor paid? And same thing for shipping. It breaks it down to say, you already paid the vendor up front $13.50. The client tax is the tax on the markup that has not yet been collected, or that was collected post-sale. Okay. I'm hoping that that makes sense. The last thing I'm going to talk about with vendor tax, and then we'll go into some questions about it that have come in, is how you can also see this on the taxes liability report. So remember earlier we went into the 3 different types of tax reports you could pull on Ivy. Taxes liability report was the company level. It shows you an overview. What you'll see here is the tax report, the taxes liability report will take into account and deduct any tax that you have already paid up front to the vendor. Okay, so that's on the markup only, that indicates that you already paid tax to the vendor. So that would be deducted from the taxable amount here. Okay. So this scenario, Tamara is asking if you checked items total selling cost instead of markup only, what that would mean is that your client is still paying the same amount. It doesn't matter to them. They are either reimbursing you or paying you for the first time for tax. So they would still pay the total tax on the total selling cost. But in the taxes liability report, it would simply show the taxable amount would be included here. And on the project tracker report, there would be a 0 for vendor tax because this is a vendor that does not collect tax. Okay. So with that, Rachel is asking, how's the vendor tax rate established? Great question. So that actually happens on the PO level itself. So let's go ahead and see what happens when our markup only item makes its way to a PO from the proposal. Of course, proposals and invoices, client-facing, POs, vendor-facing. You always should create a PO, even if you're not sending it, even if you're working with a retail vendor like Restoration Hardware. What you'll do is simply click over here, generate PO. We indicated already on the vendor level that Restoration Hardware collects tax. So what we should expect to see here is that the taxable checkbox, as it is over here, indicates that yes, tax is paid to the vendor on the vendor level. And we determine that from the vendors tab. All tax rates in IB can be determined on the document level, and you'll see that right over here, 10%, $235, and save it. Okay, so that's where it's determined. Now, what I'm going to do is go into the project tracker, and we can take another look at that item from Restoration Hardware and see once again the breakdown. You'll have the proposal, you'll have the PO, and then the total, and then it will have a breakdown of the client tax and the vendor tax. So you could see that directly in IB, or you can simply pull the report, which will show the values. Okay, so this is really an amazing function. It allows you to get reimbursed, not pay the government twice, and really go through understanding that you are probably going to buy a retail at some point in your design career trajectory, and we want to make sure that you are managing that accordingly. So with that, let's just recap, and then we have a couple minutes to take some questions, but I want to just make sure, I know that this is a very dense topic, and I want to make sure that you understand everything that we went through. So starting at the top, where taxes live in IB, they live on the product or service level, they live on the rate level, the vendor level, where we can indicate whether the vendor charges tax or not, and of course, the sales tax function on the account, project, and document level. IB's reporting is accrual-based, meaning we have a couple best practices. Because any document that you create on IB, any invoice that you create on IB, will have tax implications now. So create a proposal first, collect 100% deposit, use retainers to collect a lump sum of money and apply to an invoice that you create when you're ready. Utilize IB's progressive invoicing to only invoice items when you get confirmation or whenever you need to, understanding that invoices have tax implications. There are 3 different types of tax reports that you could pull on IB, and we kind of saw the big picture view, and then we saw post-vendor tax view. We saw the taxes liability report on the company level will indicate total tax numbers, taxable items, and then taxable value of items, and then the tax that is owed. Invoices report, document level. Project tracker, item level. It's kind of like an upside down triangle where you have the most broad to the most granular. And vendor tax. This is an amazing way for you to identify tax paid upon purchase to vendor and reimbursing the tax that was paid. So you're not collecting tax twice, you're simply collecting the reimbursement. So you could do this on the vendor level, indicating that the vendor charges tax, and then on any corresponding product or service, indicating markup only will allow us to know tax paid to vendor was X, tax paid by client on the markup was X, client is still paying the total taxable amount. Okay, and you could see that in a couple different places on the project tracker report, in the project tracker itself, and in the taxable liability report. That number of taxable amount will deduct what has already been paid to the vendor. Okay. Tamara, can you repeat the reason to choose markup versus total selling cost? Not clear on the reason why you would want to use markup only. Again, total selling cost is going to be if you haven't paid tax to the vendor. So if you're working with trade vendors, if you're working with Laloy and you have your resale license, Laloy didn't charge you tax, that's when you would select total selling cost. Markup only indicates that you've already paid tax on the unit cost of the item. Jessica, can you explain again why you need a PO for retail vendors? Absolutely. This is part of a little bit of a bigger conversation beyond tax specifically. POs indicate money out. Invoices indicate money in. When you're talking about profitability and understanding your profit to the government specifically, you are collecting an invoice for $10,000. $9,000 of that is product. Without a PO, you have no way to say, that's $10,000 in my bank account, but I paid out $9,000. You need the PO to be able to show what the money in was and what the money out was. Whatever's left over is your profit. That's what we want to know. POs are super important to create because they indicate money that you paid out to a vendor. Bobby, you're asking a specific question about QuickBooks syncing. I don't want to get into that because that will kind of take us to a rabbit hole. You can always email support@ib.co. And then we have one question from Linda. 2K. Okay, sorry, this is a little bit hard for me to understand. 10K on trade only, no sales tax up front, and then advanced 2K various retail purchases for 2K. Oh, okay, yeah, you're asking, she's asking if I'm purchasing 10K on trade only, no sales tax paid up front, and then I'm advancing 2K various retail purchases where I do pay sales tax, but I have not marked up. Would you recommend putting items on the proposal? Absolutely, start on the proposal. The beauty of Ivy is that it's line item based, so you can determine line item by line item. So you have, let's say, the 10K of trade only products. So all those trade only products, make sure it says total selling cost. That's what the default taxable nature would be because the vendor does not charge you tax. You are charging tax on the total selling cost. And then in the case of the items that you are paying retail purchases but no markup, you have zero markup, still choose markup only because that would indicate that you've already paid taxes out to the vendor. So yes, absolutely, start with the proposal. You'll eventually need to put it on an invoice anyways. And then Jessica, is there a reason you need QuickBooks in addition to the reports available through Ivy? That's a personal preference. No, you have, if you're just looking for tax numbers, you have it right here in Ivy. The businesses that use QuickBooks are those who want to reconcile their bank account, reconcile their credit card statements, pull more detailed reports, customizable reports. Like I said, QuickBooks has like 90 different reports that you could pull. If you're cutting checks as a business and you want to cut those checks, you could do so in QuickBooks. There are just different functionalities depending on your business needs, but Ivy full-fledged can tell you exactly how much you would owe in taxes. Okay, Great. So I hope you guys were able to, I hope that this was beneficial to you. I hope that this clarified how Ivy works with taxes and how you can work with Ivy on your taxes. And actually, there were 2 questions that came in that I forgot to go over. So somebody was asking about going back and editing invoices from 2018 to basically show the vendor tax function. I would absolutely not edit an invoice in a period that was closed already. As it is, I would not recommend editing invoices simply because of those tax implications. Ivy's accrual-based system means that you created an invoice in November of 2018, let's say, and you pay your taxes end of year for 2018. Do not go edit that invoice. Like, I wish we almost had a lock button to say, are you sure you want to do this? That was last year. No, I would just start fresh with everything going forward on how vendor tax works. Do not change paid invoices that you have already potentially paid taxes on. So no, just to answer anything about changing invoices, don't do it. And somebody at the beginning asked what my position is. I manage Ivy's operations. I know the product intimately because I love it, and I do all of our internal training. So, and I work with all of our teams. So, really appreciate you all tuning in to this Accounting Heavy Friday session. Love spending time with you guys, and we should have some exciting webinars, product-specific webinars coming up in March. So be on the lookout for those emails. And you'll all receive this recording. So take care, have a great weekend, President's Day weekend, and we'll talk soon. Thanks. And webinar.